Hello, my name is Mike Ward, and I'm the Global Head of Life Sciences and Healthcare Thought Leadership at Clarivate, a provider of tools and solutions to help those engaged in research accelerate their innovation efforts. The theme of On Helix this year is New Medicines in a Brave New World. And if there's one thing that we've learned in the past year and a half, it's how science-based and high-risk research has actually can make massive advances. The pivotal role of the biotech sector in the discovery and development of new medicines is well recognized. Indeed, 9 of the 10 best-selling drugs today sold by multinational pharma companies were originally created and developed in the labs of biotech companies. And that's an activity that has relied heavily on the support of the venture capital community. In line with this, I'm delighted to be joined by Francesco De Robertis, a co-founder and managing partner at Medici, one of the most prominent financial supporters of innovative biotech activity, and a pioneer in the development of asset-centric investment, which involves supporting programs to a critical development stage that then could be partnered to larger businesses. Earlier this year, Medici took a different tack and opted to create its own vehicle, Centessa Pharmaceuticals, to advance programs itself. So I'm delighted to be joined by Francesco. Francesco, welcome.
Hi, Mike. Nice to be here. Thank you.
So, in the first iteration of the asset-centric approach, which you and Medici were the pioneers of, as I mentioned in the intro, the idea was to take assets to a point where they would they could be sold on to a partner for further development. Why have you now opted to create in Centessa Pharmaceuticals your own pharma company?
So, Mike, I think you're totally right, and you are among the most acute observers of the business models in financing innovation. And you have been following asset centricity for many, many years. So you understand deeply well what we mean and what is asset centricity. And asset centricity, it's an operational framework. It's not an exit mindset model. It's an operational framework. And the operational framework of really focusing the entire outcome of a certain R&D environment around a single program. That has been the basis for our investments over the last 15, 20 years, which basically means that when we create a startup, when we invest in a startup, the eyes, the brains, the souls, and the hearts of the researchers that are running that operation, they are only focused on that specific outcome, on that specific operational framework, on the one program. Of course, the natural consequence of having an organization which is focused on one program is that if indeed we are right, if indeed the R&D team is right in wanting to pursue that program, once the program achieves successfully proof of concept, it is very, very difficult for pharmas not to try to acquire that very light infrastructure, IP-rich kind of company away at phase 2 or early phase 3 stage proof of concept, which has been a very specific, very clear descriptor of our investment model, but not the goal. The goal is to make sure that the investment decisions, R&D investment decisions, as we make them along the way, are not polluted or diluted by other programs which are orthogonal and complementary to the key program. The key program is the single decision driver of R&D decisions. We've seen that this correlates with better decision-making. Now, the exit model, of course, of single asset companies, for what I was saying a second ago, it is very much in line with a very easy M&A exit market at proof of concept, because of course, pharmaceutical companies that are interested in our IP do not have to cope with having to acquire a pipeline of products of which only one is really their focus. So that has been the natural the natural operational consequence of the strategic decision, which is single focus. Now, what we have decided to do with Centessa is not go away from that operational decision-making model, which is the descriptive feature of asset centricity. What we've decided to do with Centessa was two things. First of all, to create an alternative path for single asset companies that after they've achieved POC, positive POC, positive proof of concept, which of course, as part of a majorly well-funded organization, could also easily decide to pursue the endeavors even beyond proof of concept. But that will come on why that could be interesting or not in certain cases. But the most important reason why we've decided to create Centessa, which, Mike, I don't see that as an exit vehicle or a Medici vehicle. That is an independent pharmaceutical company. Actually, you've seen that the company just went public, a few days ago. Today, it's an independent company. Of course, granted, Medici is the single largest shareholder in that company, but it's not a company that is controlled and not governed by Medici at this point anymore. The reason to create Centessa was really following many conversations that I had with the top R&D leaders in many pharmaceutical companies over the years, when we have been starting to describe outside what we meant by asset centricity and this single-minded operational focus on R&D programs. You know that many pharmaceutical companies decided to invest in our funds to be closer to this investment model. And in the end, I heard a lot of the heads of R&D saying, it would be really interesting to be able to implement this model, this single project focus, operational focus model inside our big and large organizations. But actually, it would never work inside our organizations. Why? Because of the nature, and of course, we can dwell that into that in a second, but the bottom line was that the organizational framework of pharmaceutical companies as we know them today does not allow for really decomposing or deconstructing those R&D departments into single program operational units with operators, with R&D scientists, which are really single purpose, because that is the key. Scientists need to be single purpose on these programs. They cannot be career scientists. Otherwise, the purpose of really sharpened eyes on decision-making of the single program does not apply. And so these big heads of R&Ds were telling me, that's a really superb model. R&D productivity will go higher with that model, but good to know, but we will not be able to implement that in companies which are already top-down structured. So I decided one day, once I've got enough assets that I'm hopeful they're going to win, once I've got enough assets which are validated, once I've got enough assets that are going to have a traction in their own, I will use those assets to create bottom-up a newly organized pharmaceutical company in which the operational logic or the R&D unit is really structured with single-purpose scientists, so scientists that have got really a very key product vision that they want to live and die by, in single program departments. And that is exactly what Centessa is. We've got 10 individual, completely different companies focused around one or two programs each of which are run independently. So each company is kept and maintained as a separate operational R&D unit. But what we have created is upstairs an infrastructure, the Centessa facilities, the Centessa HQ, headquarters, with a blue chip management team, and we can discuss about that in a second as well, that of course will grant and will use their long-term knowledge, experience, track record, and success to be applied to each of the individual single asset companies that will benefit from this incredible lift up. So that is really, Centessa is the first ever asset-centric pharma company, which means bottom-up operated, data-driven, no top-down constraints.
So, that's interesting, and particularly as you sort of describe the challenges that the big pharma companies have, just in the fact that they don't have maybe the agility. I'm sort of thinking about a couple of years ago, Gary Pisano, who is a leading researcher in how businesses can manage or harness innovation effectively. In an article in the Harvard Business Review, he highlighted what he saw as the key elements for, success in innovation, and they were that there had to be a sort of a tolerance of failure, a willingness to experiment, that there had to be a sort of a safe environment where everybody could actually speak up, but also to be highly collaborative and non-hierarchical, which is, I think, a sort of point you were making. But he did also point out that they had to be counterbalanced by behaviors that would be considered less fun, such as intolerance to incompetence, rigorous discipline, brutal candor, as well as high levels of individual accountability and strong leadership. So, yeah, I mean, first, do you agree with his thesis? And secondly, if so, how will Centessa be aligned with that?
Yeah. Yes, very interesting, Mike. So yes, Gary Pisano, it's a KOL, it's a luminary in the space. And so yes, I absolutely see and agree with his descriptions and with his analysis of how innovation should be managed and what are the benchmarks for success. How is Centessa matching, or how is Centessa utilizing these principles? In order to do this, let me just use the examples, or to speak and to focus around Cambridge, which is the purpose today. We've got 3 of the companies which are based out of Cambridge, 3 of the single program companies that are Centessa companies that are coming out of Cambridge. And I want to use the scientific geniuses and leaders which are behind each of those companies to give the example on what is Centessa doing that mirrors Gary Pisano's insights. Jim Huntington, Trevor Baglin, Nick Morrell. And I'm forgetting others that are really important in Cambridge. Of course, we've got the Orexin endeavor at Aptaris, but let's just focus on the tight Cambridge community. So Jim Huntington, Trevor Baglin, and Nick Morrell. These 3 individuals, these 3 academics, they are geniuses and brilliant scientists in their spaces. Jim Huntington, world expert in what he has been doing. Nick Morrell, key opinion leader in PAH. Trevor Baglin, genius and very experienced MD or consultants, as you say in the UK, in hemophilia and in coagulation. So these people have got very narrow domain excellence. These 3 gentlemen, they would never go and work, I dare to say, for a large pharmaceutical company where their job would be, of course, to focus on their domain of expertise, but where there would be a G&A and a project management kind of environment to be managed, labs to be managed, departments to be managed. These kind of people, of course, they would not be junior scientists at their desk. They would probably be given bigger responsibilities inside a big pharma company. And that is exactly what they would never do, because what they're driven by, I dare to say, is just to make sure that their vision, their product idea, their scientific medical insight is really what it's taking 100% of their brain time. They don't care about performance reviews, HR management, structuring a department. They don't care about that. What they care is to really autistically focus on what really makes them excited, which is their mission in life, okay? With that in mind, these 3 people, these 3 scientists, of course, what are they getting into Centessa? Why it was a no-brainer for them to join Centessa, as opposed to keep on doing what we were doing, which was, they were running their companies. We were saying, yes, boss, we'll keep on financing, because as long as we think you're the best, we'll keep on financing, blah, blah, blah. So what has Centessa given them? Centessa has given them, while preserving their operational freedom of really driving the car in the way in which they mean. On top of that, Centessa has brought to bear to Jim, Nick, and Trevor a set of tools, expertise, access, knowledge, lessons that I would have never dared to be able to provide Jim or Trevor or Nick. And of course, I could have hired the right consultant for the right moment, but we all know that alignment of incentives and being on the same boat is the best proxy to make sure that the advice and the mind share and the decisions are really taken out in sync. So when we brought, for example, to Centessa, Antoine Hiver, the chief medical officer, or Saurabh Saha, the chief executive officer, these guys are really leaders in their space. Antoine Hiver has been leading the development of 11 drugs onto the market in oncology, granted on oncology, but is one of the most experienced drug developers. So when Jim Huntington now can be challenged or can ask questions, what will life look like in 5 clinical trials from now, so that I can start thinking, Antoine Hiver has got something to say, and Antoine Hiver is motivated in saying the right thing, not just giving smart sounding advice, but it has to be the smart and tough advice from time to time, because we are all in the same boat, Antoine Hiver included. So while at the same time, you see the excellence of people is guaranteed by the fact that the mission really correlates with what these people were meant to be in life, not to be career scientists. And there are career scientists, and it's brilliant that there are career scientists, but these people, the captains of the individual companies that are Centessa subsidiaries, they were not born to be career scientists. So they can keep their excellence in their domain. They can complement their excellence with the excellence of other people that maybe are, for sure, much less expert on the specific subject matter on that little protein or that little approach. And that really guarantees excellence across the board. And then, of course, we have set in place an operational framework where incentives are aligned in order to booster cooperative behavior. Centessa is really an experimental game theory kind of practice course in pharmaceutical, because of course, when we understand how incentives are set, Jim is going to win big really if Z factor is going to win big, directly is going to win big, but also everyone, Jim, Trevor, Nick, they are all being part of Centessa, of the upside driven by Centessa. So in the interest of Jim is that Nick wins. In the interest of Nick is that Jim wins, because all of Centessa will win in a materially impactful way. The difference between these ship captains, as we call them internally, my father was an admiral, was a military admiral. So I've sort of this jargon that goes back to that world. We call them the ship captains on these individual ships, because when it goes well for everybody, for each of them, it will go well for everybody. And that is really something that we've been able to create. It's almost like a cooperative among individuals, these pharma companies. I don't want to say that this is a left-wing kind of pharma companies. No, this is pure capitalism. But what I'm saying is that game theory says, don't take the last dollar off the table, because leaving $0.50 there will become $1.50 a little bit later if there are other gates to jump over. So there is really an economic incentive theory, an opportunity cost incentive theory that really is at work here in Centessa. The final point that I would like to make for the purpose of describing the Centessa and Gary Pisano, one really important feature of Centessa is that if any of the 10 subsidiary companies turns out, as it will, turns out disappointing in terms of data, a very key important feature of this operational model will be that if subsidiary company number 7 has disappointed in terms of data, we will shut down that subsidiary company in no time. And the reason why in no time is credible is because there is no fights, there is no painful situations. The scientists that are running subsidiary company number 7, I don't even know which one it is, okay? So I'm just using an X and a number. But the scientists that are running subsidiary company number 7, they only care about the programming in subsidiary company number 7 intellectually. In the moment in which they're the first ones to realize, good try, but actually that molecule was not really exactly what was supposed to be doing, they're not interested in finding another target to work on something. Done, they're done. So these are single purpose scientists, which enable an asset-centric company. Now, from an R&D metric standpoint, from a Centessa standpoint, this is great because, of course, there is no good dollars after bad dollars. If Centessa, instead of having 10 companies, will have 9 companies, that is fine, because that is exactly the R&D game that is played every day inside pharma. But of course, the important thing is that there will be no drag on R&D costs, no good dollars after bad dollars. This is really a key feature of Centessa, of the operational model of Centessa, which really doesn't allocate any kind of infrastructure into any of the subsidiaries. So the subsidiaries are like to kill, in line with what the founders want, is that there is no trauma or no arm twisting, say, we need to close, we need to close. No, those scientists are almost too quick on the trigger to close when they feel, this is not what I thought it would be. So that is really the mindset. And as you see, that this really distinctively differentiates human behavior of the key scientists that drive innovation inside Centessa, as opposed to scientists that, God bless them, are career scientists that have jobs inside pharma. Here is not about jobs inside pharma. The Centessa captains are not looking at Centessa as a job. They don't need a job. They just need a platform to deliver their product vision. That is the intrinsic behavioral difference between Centessa and the rest of the pharma that, of course, matches what Pisano is saying in his insights.
You mentioned that, say, for example, if Project 7 or Subsidiary 7 is to, they decide to shut up shop, or you decide to shut up shop because it isn't achieving what you want to achieve, what happens to the share of those scientists? Because, clearly they are part of Centessa. So are they able to, maintain their ownership of their share of Centessa?
Of course, yes. Yes, this is a good question, Mike. Yes. If Subsidiary 7, as driven by the scientist, says, this is not what we thought it would be, they are really not incentivizing trying harder to save something which is against the odds. Okay, and sure, there will be some false negatives along the way. So we will shut programs that maybe could have been saved, but there is no distorted incentives, because those scientists of Subsidiary 7, they are option holders, shareholders in Centessa. So they will still route for the other 9 vessels, the other 9 ships at Centessa to win. Of course, why are they incentivizing making sure that 7 could win? Is because, of course, if 7 wins, they are also going to be, they are directly incentivized as well in a direct dividend or in a direct exit carve out from that program. So while they have a good share of the whole Centessa, of course, they are going to also be incentivized from their 7. This balance of incentives should preserve the natural behavior.
Right. I wish I'd known about the Admiral story before, because I'm sure that we could have had a lot of fun sort of using lots of sort of nautical metaphors for this. But I was just thinking, if one looks at what Pisano was saying, he was sort of saying the collaboration, and we can sort of see that the most successful research groups are the ones that in fact are multidisciplinary, etc. I'm just wondering, with Centessa, what are you doing to ensure that you're able to bring that multidisciplinary approach? Because if you've got all these brilliant people all working in their different areas, are there not opportunities for them to share best practice, or even just reflect and come with a different perspective on what somebody's working on? How do you get that to work?
Yeah, absolutely, Mike. So that's absolutely a great point. And intersections, it's at the basis of creativity. Intersections from different fields, different sectors. This is also why, very clearly and objective, not because I'm Italian, but because in Florence, in the Renaissance period, everything happened of what happened. So, Galileo, Leonardo, Michelangelo. Why? Because there was intersections among all different kind of arts. They were all financed by the Medici family, the real Medici family, not the venture capital. The Medici family, they were keeping all of them at court and they were financing them. And so people were really having intersections with very different people. So consider these are single program companies in their genetic fingerprints. So if we were not doing Centessa, these companies would go on their route, individual routes, and the way in which it would be more of an execution play on a very specific product vision. And so there is lower opportunities for creativity coming out of intersections, as opposed to a new platform technology that says, where are we going to apply this platform technology? There, creativity is probably more immediately usable, because of course you need to decide if you go left or right or center. In a product development play, there is less opportunity for that kind of really orthogonal creativity that is going to change the routes. So notwithstanding this, all the ship captains, we do the town hall meetings, okay? And in the town hall meetings, also because everybody loves being a Centessa company. These 10 companies were selected out of a portfolio that we have of 50 companies. So they all love being with each other there. And of course, these are super high smart scientists with a very specific expertise, but they are smart scientists. So they love poaching at other, why didn't you do that? And why didn't you do this? So that happens in a structured, organized way. But we'll see also when the world reopens. Remember that Centessa was not existing at the end of September. I decided to do Centessa in the third week of September. This was in the COVID world, right? So I've never met even the CEO of Centessa, Saurabh. I've never met him. I've only seen on Zoom for hours and hours and hours, but I've never met him. So once the world reopens, we'll make sure that these people can really throw darts at each other and see how this can grow. They are not going to be part of the same individual operational units, but they're going to be part of the same boat, okay? Because all these people have got equity, ESOPs, options, and outcomes which are shared. So I do believe the cooperative behavior, which of course, it's really game theory at work, is really key, especially in these sciences, which are not hard sciences, are driven by experience. So we need to make sure that someone that has already seen a certain pattern can share that observation with people that have never seen this. So in sciences, in biological sciences and medical sciences, cooperative behavior is absolutely key. It's absolutely key.
I mean, it's interesting, sort of, I'm sure that this is a question that the audience, if we actually had a sort of a live audience, that would be itching to ask is, you mentioned that there were 50 programs within the sort of the Medici portfolio, and 10 were selected to be part of Centessa. What was that selection process? What differentiated these 10 from the other 40?
The vision behind Centessa, the one that I put together on the third week of September, was really to create a pharmaceutical company, right? To create a pharmaceutical company means to go to the public markets. To go on the public markets means that you are competing for a short attention span from the public market analysts, investors, sell-side banks, buy-sides. So I really decided that the programs that would go into Centessa would have to be easy to understand and de-risk programs. So basically are not first-in-class programs. Okay, they are all very high innovative content, but are working on precedented mode of actions. So it's what we call in jargon, me better opportunities, right? But massively better, not generics improved, of course. We are venture capitalists, so we do not have, or at least we haven't the ambition in our portfolio of not having marginal innovation. Otherwise, why would we invest? We invest in companies that have massive margins of innovations, but we have mechanism of actions which are completely first in class that still need biological de-risking. And there are some other mode of actions or some other programs which are based on precedented mode of actions where we are mapping out the risk that we are trying to discharge from the equation in a very measured way. So, and that was really a good decision that we took, because once, remember, third week of September, we had just an idea, no management team, no co-investors. October, November, December was really done to really make sure that private equity houses and co-investors, crossovers would like the story. And you have written about this. The Series A of Centessa was massively oversubscribed, exactly because each of the 10 companies that we described easily and quickly and in a very communicatable way to the other investors were all massive upside opportunities on the basis of a very manageable risk profile. Now, this could have been a pitch. Now we are after the Series A, and those kind of investors have spent days and weeks in the data rooms, so they've validated that risk reward. And now we are even a public company, so there is a lot of additional validation. But the way in which we selected those programs was a lower than usual risk profile, an understandable, complete understandable upside, so that when these investors were excited about one company and a second company and a third company, when they heard that there were 10 companies all in the same equity vehicle, we couldn't stop getting them into the company. So we had to fight hard on who could come in and who could not come in. Many of the individual subsidiaries, not many, a few of the 10 individual subsidiaries, they had offers for M&As, they had offers for crossover rounds, individual crossover rounds ahead of the Series A. So, there was a challenge when I gave a call to Jim, Nick, and Trevor to say, guys, let's put everything on hold. We're going to do Centessa. That was, especially if you know the character of the scientists, that was not the very easiest first conversation. But then as we, how the conversation went was that I promised them that I would not drag them, even though, of course, Medici had the big equity ownership in each of these companies. I promised them that I would not drag them into anything that they would not want to do. Of course, that is not how, work works in a free world. But at least they owe me to listen up carefully for as many hours as I needed, because to listen carefully to the whole vision, A to Z of what Centessa was. And in the end, I didn't have to drag anybody. In the end, all of the ship captains decided that they wanted to join, because in the end, they were maintaining, to the legal extent possible, the freedom to operate. They were maintaining, the stewardship of the vessel, of the ship. At the same time, and the incentives that goes with that. At the same time, they were given, on the basis of game theory principles, they were given important equity that they would have not dared to imagine before on other 9 companies. By the way, being Medici portfolio companies, they knew very well, or to a certain extent, and so they were excited about also being vested in the upside of the other vessels.
All right, and what's the plan? I mean, you mentioned that you at the outset you were looking to create a publicly quoted pharmaceutical company that had lots of opportunities, but sort of you had 10 programs. What are sort of the plans for expansion, and what is the vision for Centessa over the next couple of years?
So Centessa is born not as an asset trading platform. Centessa is a pharmaceutical company with an R&D logic, which is defined as asset-centric. Bottom up, there is no therapeutic area constraints down. There is no balance of a portfolio looks, oh, we need to have more phase 3s now. We need to have more. There is no top-down view of the world. There is a bottom up. There is a new company that has got a molecule that is going to deliver useful medical innovation. That is something that we would finance. So the vision of Centessa is to become a pharmaceutical company. In order to be a pharmaceutical company, we need to have a pipeline that grows, or that doesn't grow, but that delivers the value that we need to deliver. So I would imagine, and I can only say that I would imagine and I would hope that we come across single asset companies, not of the Medici portfolio necessarily, maybe also of the Medici portfolio, but this is not a Medici company. Centessa is not Medici public. Medici is the largest investor. It's a portfolio company of Medici's. It's not Medici. So I hope that Centessa will come across single asset companies which are at the stage between late preclinical and early phase 2 before POC, that are single focused, not platform companies, but they're single focused, not pipelines, they are single focused programs. By the way, let me put a little parenthesis. That could even be the unusual platform that basically changes the industry, and we would love to own it. But of course, everybody would like to own it. So, the company number 11, company number 12, company number 13 of Centessa would have to be a single purpose company, which at some point it's late stage preclinical or early stage clinical, with ship captains, with people that really we think are the smartest, sharpest in their space. Why do they need to be exactly that brilliant and that great? Because when we get this 11th company on board, these guys, in addition to be left alone and empowered even more with additional resources, additional access, additional financial power, they will also be sharing into the upsides of all of the other 10 companies. So in order for everybody to be happy with everybody, we cannot dilute on the level of, oh my God, the ship captains of company number 11 is the world expert in that specific space. Because otherwise there would be people that would say, I'm getting diluted, but it's not really, exciting. So there will be company 11, 12, 13. I don't know when. It's not a question of if. In any case, the business model of Centessa is based upon a pipeline, an evergreen pipeline. I really hope that in 10, 15, 20 years, Centessa will still be existing as a standalone company. I fear that it won't, but I really hope that it will still be existing as a standalone pharmaceutical company with products on the market and with a demonstrated R&D productivity metrics, which is superior to the rest of the industry. That is the ambition.
Right, great. Francesco, as always, a pleasure talking to you. Thanks very much for taking the time to speak to us today. I think the audience is going to be really, really interested, both in terms of the sort of the vision that you just outlined, but also actually seeing the progress of Centessa. So we would normally sort of have applause from the audience by this point for them to show their appreciation of your insights, but we just have to imagine it. So thanks again, Francesco.
Thank you very much, Mike. Always pleasure to talk to you. Thank you.